Hey everyone, Dan here. We are going to take a look at SoFi and the upcoming earnings report and how it might impact the price. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, we're about 3 emails away from hitting my goal of 100 people signing up in advance for my email newsletter, which I haven't even started to conceptualize yet, but I will once the list hits 100, and we're at 97. That link is in the description below. It's just a Google form where you toss your email into it, and then I'll start putting the email together. It's just going to be once or twice a week. It's going to be supplement data and info on some of the videos that I do, and then also some additional plays and trading ideas that I just don't have time to do videos for. So if that's interesting to you, toss your email in there, and once we get to 100, I'll start to sort of put it together, and then before I send out the first one, I will send a note to folks and say, hey, here's what it's going to be, here's when I plan on starting it, and if you want to opt out, here's how you can do that. So definitely we'll give folks an opportunity to hit the eject button if they decide later on that they don't want to be a part of it. All right, so SoFi has earnings coming up sometime in this coming few months, next couple of months, because we just closed out the second quarter of 2021 as of the end of June. And so this had me thinking, I was thinking about this for a couple of reasons. One, because there was, all of the news from the great earnings just before the merger happened, and we'll go over that in a second. But then also there is this unusual options activity, which is really can often mean nothing. And I had put this in, I think last Friday's video. But basically, the price being a little over $18 at the moment, these are 1750 puts from with a August 20th expiration date. So this had me thinking, and this is probably speculating that will be after earnings are released. And so maybe there's some speculation around that earnings could yield a bad result, which we'll go through some sort of reasoning why that would be the case, and kind of work ourselves through it that way. But obviously nothing changing on the SoFi chart since last Friday's video because the market's closed today. So go back and have a look at that if you would like. So let's jump into some info with earnings. So this is investing.com, and they actually are putting out, I don't know why, a release date here of September 1st, 2021 for the period ending June 2021. I don't see that anywhere else. That doesn't mean that it's wrong. It doesn't mean that it's right. Somebody in one of my comments, I think in the video, had said August 11th. I also didn't find that anywhere. But if somebody has a source, feel free to share it. So I don't know how legit or how real that September 1st date is, but it's something to keep an eye out for. I mean, obviously it'll get announced in advance. So, you'll know. On the NASDAQ site, they sort of support the idea of there's no date yet because they have essentially, quarterly earnings forecasts, it's just lined up for when these quarters are ending. And then at the top here, they have earning announcement for SoFi. Our vendor Zacks, which is where they get their estimated earnings date, hasn't provided them with an upcoming earnings report date yet. And if you don't know, this is really weird, but the way that any of these sites put a date that they expect earnings to be released is just based on an algorithm as to when the company has historically put out its earnings. And so the algorithm then puts an expected date on there. Until the company itself announces it, there is no reality to that date except for they're saying, hey, we think you can expect it on this date. Obviously, once the company announces it, then But even then, sometimes you've seen before where a company will change the date after they announce it, which can kind of turn against them in terms of the price activity. That's often not received very well from the investing community. But, basically the estimate here, the consensus forecast around what the earnings per share, EPS, is going to say is going to be minus 0.05, so 5 cents a share. That's the same thing that's reported on investing.com, so that certainly tracks. And then they are also showing a revenue forecast of 236.8 million. And you see here there was previous June 2nd, with the period ending 3, so March 2021 was reported on June 2nd. That was 226.7 million forecasted, 221.35 million revenue realized, or in reality, I should say, not realized. But, you know, this is all sort of like speculation, and this is why I kind of wanted to talk about it. If you remember back when the pandemic hits and we had that enormous sell-off, there was like a period after that when things kind of started to recover, and there would be poor earnings come out, or earnings would come out, and companies would just ditch guidance altogether. They just would not give guidance. And we did see in some places at that time, companies' stock price jump up when there was this sort of like missing of their expected earnings. And you know, a lot of this has to do with what's leading up to earnings. So it's not as cut and dry as if there's a good earnings report, the stock price will go up. There is, if you're not familiar with this, and apologies if you are, and I'm just repeating something that you know, but there's certainly such a thing as already priced in. So that's like a common phrase that people use of good earnings is already priced in. So if that's the case, what can happen is, people have already driven the price up to a level where they are expecting it to beat earnings. If it doesn't beat earnings, that's when you get these massive sell-offs that are just seem unforgiving and like unwarranted given the news. But you have to take into account, it's as if the price ran up on great earnings, but those earnings weren't reported yet. And then when something finally was reported, they were bad earnings. Or something changes with the guidance, which is what the management team says you can expect in the future. And if that is poor guidance, or they expect a downturn, or they're trying to like kind of give some buffer from what retail and investors and institutions might expect, and so maybe they don't give strong guidance, that can certainly slaughter the price as well. So the thing you want to be very careful of is pre-factoring in good news. And then even if that news is good, sometimes it will sell off a bit because people are like, okay, that's done, let me sell. That's what I figured it was going to be. So let me sort of like cash in on the hype right now. The hype is done. There's no more running up to be had here. To the other side of things, if expectations are low, or even if expectations are solid, and a company then beats on earnings, has a good report, or has an unexpectedly fantastic report, or something in the guidance, sort of like emerges as a hype factor, then that can certainly take a stock and skyrocket the price, that's for sure. So it's kind of like the scenarios that I wanted to discuss today, and we'll do it again as we get closer to the expected earnings date, but I just wanted to sort of like give folks an idea of what they could look for now. And if we hop back to the chart, actually, one of the reasons was because options, if you play options, speaking of this unusual options activity, those were August 20 dates, and again, so they might be trying to take into account if there is earnings, that they think that those earnings are going to result in the price shooting below 1750. And the implied volatility around earnings often goes up quite a bit. And the implied volatility will then make your options prices much higher, because the likelihood of it hitting and exceeding, the very high calls and the very low puts is increased, because there can be these dramatic buys and sells, these dramatic pumps and dumps because of the earnings news. And so your options on both ends of the spectrum get much more expensive because the implied volatility goes up. And then also, after earnings is done, and after, even if there is a big event and it is a big pump or a big dump, there's something called IV crush, which is implied volatility crush, which is the IV goes way down, because now the likelihood of it swinging wildly in just like a very short time frame is reduced by a lot because earnings is already passed, that event has already taken place. And so the the extrinsic value of that option is then depleted significantly based on the implied volatility going down quite a bit. So just be cautious if you're buying options very, very close to earnings. It's going to be extremely expensive, and especially if you hold them through earnings, I mean, that's an incredibly risky move. Just be aware of that. If you're buying options further out, like if you're buying them now for August 20th, you're probably right on the cusp of things starting to jump up pretty soon based on implied volatility. But right now, these like fairly at the money options, or as close to at the money as we can get, just have like 101 and a 109 implied volatility, which is fairly high. But as you get further out of the money, the implied volatility is going up, and I would just note that if you are going to go ahead and buy options on like August 10th or 12th, like these are going to be very, very expensive based on the implied volatility. So just keep that in mind. That's the erraticness of the stock price goes up significantly as it gets close to earnings for all of the reasons that we just described. So basically, earnings coming up sometime, maybe August, maybe September. Expected EPS of minus 0.05. We have here a couple of news stories. So last earnings, so accounting for what happened last time, blowout results ahead of the SPAC merger. So let's look at some of the key factors that made this sort of like the predominance, like this you'll find this all over the place, but this was the predominant news item based on SoFi's earnings last time. So this was published on May 22nd, and we can quickly pull up the chart in that area so we can get an idea of where things were around this time. So this was May 22nd was after this date. So it was just before this pump started here, okay? So keep that in mind. We saw like this nice run up, right? And that even though it retraced a bit, like, this is the run up from good earnings. Like that's often what it looks like. And then there's often a separate but equal beatdown or retracement that can happen, or very, very close to losing all of the gains that you had. But what they looked for here that they thought was so great was adjusted net revenue in the first quarter came in at $216 million, well ahead of SoFi's guidance of $190 million to $195. So that's the guidance that we're talking about. They had said previous earnings expect $190 to $195 million next quarter, or in the first quarter of 2021, and it came in at $216. So it's quite a strong beat. Top line result also includes a $5 million hit due to interest expense. Okay. Translated into adjusted EBITDA of $4.1 million, somewhere beating the outlook of negative $5 million to positive $1 million. So that's pretty impressive. Anything's flipping, like for these growth stage companies or very, very late stage growth companies, from negative to positive is very, very impactful. Remember, growth, meaningful acceleration of 110% up to 2.28 million. Seventh consecutive quarter of accelerating growth. So these are all factors that are going to be like expected from SoFi to perform on when these earnings come out. So just be very vigilant of the net revenue and how it pertains to guidance, and then the member growth accelerating. Because remember, if it was the seventh consecutive quarter of accelerating growth, if it has a down or a flat quarter, that's going to look pretty bad. So just keep that in mind. And then if we look down here, student loan organizations, blah, blah, blah. SoFi reiterated its full year 2021 guidance, forecasting adjusted net revenue of $980 million for the year, representing growth of 58% over 2020. Adjusted EBITDA in 2020 was expected to be $27 million. So these are the things to look out for when this earnings season comes up. And just keep in mind that, like, whether it's before the bell or after hours, when these are released, there will be a lot of trading activity happening around that. So if you don't have a broker that's allowing you to trade in the pre-market or in the after hours, there's a ton of free ones that let you do that. Webull is one of them, and there's a link in the description below if you want to sign up with them. It's also the charting software that I use in these videos. 3 reasons to be bullish on SoFi. So here's just other sort of like relatively related news. Strong growth in members and revenue. So again, these are going to be top of mind as the earnings come up for this year, for this quarter. And right now, this is sort of like transitioning between, okay, so that's what folks are going to be looking for. And then where do we stand right now? So in other words, how priced in is this? So we see previous to the last earnings, which, was like this run up, and then certainly some of these additional run ups were still fallouts from that good news. It had run up quite a bit already. It had run up from $14 to about almost $19 by the time that news hit. And then, we saw bumping up nearly to 25. So even though it had a good run already, it had plenty of more room to go. Now, if we compare that to where we are right now, that good news hit around, what did I just say? Just shy of 19? That good news hit around, that good news hit and it was just below 19. So right now we're actually lower in price than we were when that news hit. Now keep in mind that's also when it was IPOE and there were many, many fewer shares in the SPAC than there are available now in the shares outstanding now that it's actually changed symbols over. So, the market cap is more what you want to be looking at with those sorts of things. But relatively speaking, these are some sort of things that you can try to use to figure out how overextended is this already and how reactionary is it likely to be in a positive or a negative sense based on what's going to be happening at earnings. So overextension is one of those things. So there's already a lot of, stories coming out, whether they are like newsworthy or kind of clickbaity or whatever. I'll leave that up to you to decide. But there's a lot of stories coming out that are basically like, this stock is looking quite low for the potential value here. And like, are folks just not really like into this one? Are folks not really getting the value yet? Is this just the market being weird with a newly IPO'd stock? So I would just look into some of these things and see, where folks are coming from. Here's one from Seeking Alpha. The best outcome appears to be priced in. That's why I threw this one up here, because this is kind of what we were just talking about. And so, there's definitely varying opinions out there. But again, take whatever with a grain of salt, as a lot of them are there for the views, and some have questionable veracity in terms of like the actual analysis. But those are the things that I would be looking for ahead of earnings. Again, we don't even exactly know when they are. We don't even technically know, again, unless somebody has a source, please put it in the comments, if it's going to be in August or in September. And then, what the price is going to do leading up to that. I don't think that we can really factor in like the price where it sits now, unless it really just moves relatively sideways until that date, which would surprise me. What I would look for is sort of like what's happening with all of the various factors that we've been talking about. The bank charter, which that probably won't have any big news before earnings, but the Robinhood IPO is going to be a factor potentially. All the shorts and the failed to delivers that we've been talking about and that sort of thing. To what degree do those things jostle the price in a certain direction or another, and then potentially put it in a super, super undervalued position regardless of what earnings are, or a super overvalued position regardless of what earnings are. So keep those things in mind leading up to this. I just wanted to sort of like put this on the back burner of some folks' minds so that they get into a good headspace around moves that they may make as it particularly pertains to earnings coming up. Well, that will do it for this video. I would love to see your comments below if you have your own thoughts or opinions, and I'm sure you do. It's an opinionated crowd, and I appreciate it. But speaking of I appreciate you watching. I appreciate you sharing on Reddit or Twitter or Facebook or wherever you share stock stuff. That definitely helps. And let's end it here. I will see you all in the next video.